position he has held since October 2008. Dr. Moria serves on several boards, including those of CDN Bank Limited and Almasi Beverages Limited, where he served as chairman, Nairobi Bottlers Limited, Isuzu East Africa Limited, and Lewa Wildlife Conservancy. Dr. Moria also serves as a director of Centum Exotics Limited, Investpool Holdings Limited, Centum Development Company Limited, and Two Rivers Lifestyle Center Limited. Dr. Moria was also appointed as the Chancellor of Machakos University in October 2016. Dr. Moria holds a Bachelor of Law degree from the University of Nairobi and a doctorate in business from Machakos University. He is an advocate of the High Court of Kenya, a CFA charter holder, a Chartered Global Management Accountant, a Fellow of the Kenya Institute of Management, and a member of the Institute of Certified Public Accountants of Kenya. Thank you so much, James, for making time for us.
Thank you. It's a pleasure to be here.
Quite a busy day, of course, having the investor briefing. And just what came through your mind as you were preparing for the briefing?
No, first, thank you for hosting me here at the NSC. It's great to be here. I've been, as you know, I've been a board member of the NSC. I just retired recently.
Sure.
So it's with fond memories that I'm back here.
Yeah.
For me, the investor briefing is always, that point in the year when you must give a report card to those who have entrusted you with their capital. And for this was yet another opportunity to do so, and it's a huge privilege to do so. So to let them know what you've been doing, what you've been up to, what you've achieved in the midst of what was and is still a fairly difficult operating environment.
Sure.
Yeah.
Let's go through the numbers, James, and what stood out this year?
This year, what stood out at a consolidated level is improvement in profitability, both at consolidated and company level. I think that is a major highlight. We had a double-digit growth in profitability at the consolidated level, and a significant enhancement in profitability at a company level, and that was underpinned by several factors. Just to mention a few. One, we completed an exit that has been in the pipeline for a while, and that contributed to the performance.
Yeah.
Two, the underlying portfolio companies, we had improved performance this year as compared to last year. We earned a higher dividend this year as opposed to last year. Yeah.
All right. And looking at your projects, James, one of the most iconic, of course, was Two Rivers.
Yeah.
And so far, occupancy is over 60%.
Yeah.
And just praise us on this project, and was it worthwhile?
Definitely. I was at Two Rivers yesterday. And it's very gratifying when you go to a location like that, which we started from nothing really. And a day like yesterday, we had 20,000 people who came to Two Rivers, and to see it teeming with people shopping, Black November, for me, I was very encouraged, and it's very, very fulfilling. So was it worth it? Absolutely. This kind of developments take time. It's a huge development. We are currently 76% let. A project will be around, we are targeting to close the year at 90, which is March next year. Even 76 for the size of the space there is, it's quite a lot. So Two Rivers just at the beginning of its journey. There are a lot of other developments coming up there. Last year, City Lodge opened. We have Victoria Commercial Bank that's opening their headquarters there soon. We have a number of other residential projects that are in the pipeline. So we'll be on Two Rivers for a long time. And it's sort of painting a canvas that is a big canvas that is never ending, and you're always adding one piece after another. We're building a city. And the journey of 1,000 miles begins with the first step. So we are still in the initial steps, and it's something we are very proud, project we're very proud of.
All right.
Yeah.
And you're, of course, one of the listed companies at the Nairobi Securities Exchange. And if you look at the performance, it has been, if I would say, many of the stocks have had a difficult year.
Yeah.
2018, of course, coming off the prolonged election.
Yeah.
And of course, other factors that happened in the market.
Yeah.
From your interpretation of the organization, you're doing a number of projects. One, of course, is the industrial park in Kilifi, to the tune of about 100 billion shillings. How are you looking to finance this?
So let me speak about the industrial park and about our real estate development generally. Our model is to develop market-validated projects. So we conceive it, we go to the market and sell it, and then we build it. So, and once it's market validated, i.e. you have a customer, financing is not difficult. Capital will always follow projects that are addressing real needs of the customer.
Sure.
So speaking of Ipingo, it's more than an industrial park. That's only one of the uses. We have industrial, we have retail, we have residential. It's a whole city. And so far the sales there have been very encouraging. We've been in the market for less than 6 months, and total sales to date is just slightly north of 1 billion in terms of infill developments, and sale of development rights there is another 400 million. So all in Vipingo, that's about 1.4 billion. So even as you are addressing now providing the infrastructure, you're providing infrastructure on a product that is already sold. We have, speaking of that, to specifically your question how you're planning to finance it, each of these projects is financed at the project level, not at the group level. Mm-hmm. So they're able to they have their own balance sheet. Mm-hmm. And so we're able to put in equity. Typically, we finance our projects 30% equity at the project level, 70% debt, which is project finance, and it's therefore non-recourse, without recourse to the parent company.
Yeah.
We have significant appetite from long-term lenders for the various projects, and each one of them is financed individually. So we have a lender who is looking at the industrial park, for example. We have other groups that are financing the residential. So each project is financed on its own merits.
All right.
So the capital is not really the constraint. The constraint is a market. As long as there's a market, we'll always get financing for those projects. Mm-hmm. Yeah.
All right. And of course, Centum has been making headlines for the simple reason that you're one of the companies that actually declared you'd be giving some very interesting dividends to shareholders as well as bonuses to the staff.
Yeah.
This year, what's the outlook like?
So let me take a step back. A few years ago, we adopted a zero dividend payout policy. Mm. And that is because we're in a growth phase of our organization. That's when we were, actually that was 10 years ago. So we wanted to scale up the organization. To a small organization, we had about 6 billion shillings of assets under management on our balance sheet. And wanted to scale that up. So to scale it up, we had to retain the internally generated funds to finance the growth. I think we are now at a scale where our focus now is to give our investors an attractive return on their investments and therefore enhance the dividend payout. So that's one of the things we are focusing on. And to do so, we need to reduce the amount of money we are currently spending on debt service so that we can divert that cash flow to our shareholders. Mm-hmm. So in the next 2 to 3 years, as our various debts come to maturity, actually we began that last year, we intend to repay them. Mm-hmm. So our balance sheet 3 years from now ideally should be debt-free. Mm-hmm. And the Centum should be one of those companies, because it has a diversified portfolio, that should be able to pay its shareholders an attractive yield an attractive dividend yield consistently. Mm-hmm. That's really the focus of the business. Now, on the bonus issue, the reason we came up with the policy, you see, the bonus is pegged on realized return that let me put it, cash return that outperforms the market. Mm-hmm. The idea there is to have a low fixed cost base, which is the salary, because the biggest component of total cost in an investment company is people costs. So keep the base low and have the bonus as a variable, mm-hmm. which is dependent on how the business performs. And therefore,
correct.
In the years that you don't have a huge cash return, like for example, in the year that has just ended, when we didn't achieve the hurdle rate, the bonus was exactly zero. So then you have a lower cost structure. And also to align the interests of management to those of the owners. And has it worked? The assets of the company have grown 10 times. Mm-hmm. The net assets, book value of shareholder funds has grown 8 times. And cost to asset ratio is still less than 1%, even with the bonus. So I think it has worked. What's my outlook on that? It depends on how well we perform. Mm-hmm. If we don't perform, the staff deserve zero bonus. If there's performance, then they'll get a slice of that, and so will the shareholders.
Sure.
Yeah.
And as we come to the tail end, Moria, of course, you've done a lot when it comes to transformative programs in the society.
Yeah.
And of course, corporate social responsibility goes without say that it's gaining momentum in the corporate sphere in the country. We are seeing sustainability reporting.
Yeah.
Are you also leaning towards this?
Yes, ultimately, you have to get the license of society to operate, and we try to align our ESG, environmental social governance programs, to the investments you're doing. So if I take an example of Ipingo, for example, where we are quite active, one of the decisions we took is for this project to meaningfully benefit the local community. The constraint they had was not unemployment. The constraint we found out was the skill set. They did not have the requisite skills. So one of the projects we came up with there, it was actually education, starting from secondary school. So taking the best students in the county and sponsoring them through secondary school, and I think we'll carry on eventually to university. And every year we are taking 50 students. So today I think we are almost 200 students who we are on full scholarships. So taking the best of that society, that was one pillar. But the other pillar is tailoring vocational training programs for the local youth. And now we are on our second cohort. And what was interesting, the idea originally was to skill them with the skills necessary for the development of the project so that then they could be absorbed. But what was interesting is that in the first cohort of 50, immediately after they graduated, they all got opportunities elsewhere, not even in our project, which proved the hypothesis that what the people they are facing is not an unemployment issue, it's a skills deficiency issue. It's true.
Sure.
And so that's what we're doing. So just this Friday, we launched the second program. We've also so we focused more on that particular project. It's around educating the people and providing them with the relevant education across the entire value chain. And we tailor different programs depending on where we think we can get the biggest impact and to impact the broadest number of people. Because if you're able to skill one person and they get a job and they're able to sustain themselves, they're not just sustaining themselves, they're sustaining their families, the extended community. So the multiplier impact is quite significant.
All right.
Yeah.
All right. And Moria, what's your general sentiment about, of course, the license from society is very critical, as you've put it. We know you have a project in Lamu, the coal plant, which has hit headwinds, of course, because of the environmental concerns as well as the people on the ground. How do you intend to navigate through these murky waters?
The interesting thing with that project, the Amu Power project, where we are one of the investors, that the local community itself, they have no issue with the project. It's been through various motions in the county assembly, and it was approved almost unanimously. The environmental concerns, while valid, they have been significantly mitigated. The IFC, the /World Bank, has various emission as a standard of emissions that they provide as guidelines for projects of that nature. And on each of those requirements, that project is way below the World Bank standard. So my own view is that the environmental issues have been mitigated. When we initially started the project, it was what we would call subcritical. So what was actually specified was a subcritical power plant. Last year, General Electric came on board, and they brought on board technology that now took that power plant to supercritical status. And so it is employing the latest technology. And they have recently completed similar power plants in Germany, and actually they're building one in Dubai. So from an environmental perspective, we'll be constructing one of the best power plants in the world. So I think what we need to do in that project, it's more of education, more of saying what we're actually doing. And that's something we'll be addressing at the project level.
All right. Yeah. All right. We do hope the project comes to completion as the timelines have indicated.
Thank you for that. Thank you for that prayer. Yeah.
And James, I just want to get your parting shot. Of course, you're one of the youngest CEOs who is leading a very multifaceted kind of a company with interests across the region.
Yeah.
I don't know, what would be that message you'd want to pass out there, especially to the middle class that is very hungry for leadership, is hungry for impactful leadership. What drives you really?
I think my message is one of hope and optimism. Sometimes I'm accused of being an over optimism, an over optimist.
Yes.
But it's that to have that positivity in and belief in ourselves, and also belief in our country. Many times we tend to see the glass half empty, but I think for you to really see the opportunity, it's important to see it as half full, and we capitalize on the opportunities we have, no matter how small they are. You may start off with something that appears really, really small. And I recall, in fact, on 1st of December, I'll be marking 10 years since I took over CEO of Centum.
Wow.
And,
congratulations.
Thank you. And when I came on board, there was only 10 million shillings of cash, and we had an overdraft of 180 million shillings. That's what I started off with. And it appears small, but it's actually big. And if we can learn to work with the little we have, and to work with it efficiently, and to have belief in it, then we have the ability to multiply it. So my mindset is that I have chosen to be successful at whatever I engage in and whatever my team engages in, despite the difficulties. And actually, the difficulties are good because they keep you sharp. If also it's too easy, sometimes I get concerned. If I go for a week without a major problem coming up somewhere, I start getting a bit jittery because it's not meant to be that easy. It's meant to be difficult, but that difficulty makes you better. If you take your challenges with a growth mindset, that I can learn from these shortcomings, I can learn from my obstacles, I can get better with effort. I think we're in a great environment, and for me, I'm very excited about the future. Yes, I know the economy is not what it can be, but it's still a great economy. Sometimes I ask myself, which other African country would we rather be investing in? Out of the 54 countries, I'm here to find one that is, in my view, better than Kenya.